Good morning, folks. Welcome to the first trading day of 2022. Happy New Year's. We have some weakness this morning in the precious metals. Gold at 1810 currently, coincident with the 20-day moving average. So maybe we get some support from that level today. In silver, we see that price is currently below the 20-day moving average and trying to push lower. So clearly we have weakness in the precious metals this morning. And so yesterday, and speaking of yesterday, we looked at gold and silver in all three time frames yesterday. So refer to yesterday's video for the precious metals, the physical precious metals. I told you I'd look at the stocks, and so that's what we're doing this morning. In the UE, this is the monthly time frame. This is the gold bugs index. In the 2008, this rally started in 2002-ish and then ended, 2011, 2012. In that bull market, the UE index that's what analysts were looking at and talking about. So, and these days, people are looking at GDX, GDXJ, SIL, other vehicles. They're not looking at UE so much anymore. Anyway, and we've looked at this chart before. This is the 50-period moving average, and so notice how when price is above that 50-period moving average, that's when we get our big upward price movements. And then likewise, when we get price gets below that level, we get the multi-year bear markets. That was 5.5, 6 years there of bear market when price was below. Notice that we are currently, price is above the 50-period moving average and has been, what's that, 2019? Yeah, mid-2019. And currently has pulled back to test support at that level. And so anyway, in the mining stocks using UE as a proxy, they're looking okay. It's certainly not exciting. If you look at fractals, so some people look at fractals in charts, technical analysis, and the idea is that patterns repeat. And so when I was looking at this chart this morning, I noticed that potentially we've got a fractal pattern when price crossed over the 50-period moving average and set out on that bull market there, that potentially that pattern, it has some similarities with this pattern. But I'm not real big on fractals, but that did catch my eye this morning. MACD is in bull mode, suggesting that the primary trend is upwards. MACD histogram is hinting that perhaps we have a bottom in MACD and that, MACD could be heading higher. Energy is still in the tank based on stochastics. GDXJ, this is the monthly time frame, big price rise, and currently we're in a pullback. And so been in this pullback for quite some time now. MACD in bull mode, volume's doing pretty much what we'd like it to do during get rid of these lines, during an upward move or bullish move. That is that when price is trending upwards, we want to see volume heading higher as well. And then when price starts to pull back or correct, we want to see volume decline, pull back along with price. And so that's pretty much what we are seeing here in GDXJ monthly. So that gives us a bullish perspective on the price action from volume. Energy in the tank again, GDXJ, daily time frame, nothing really to add here. We're about to run into, assuming that price heads higher from here, we've got resistance at the 50, resistance at the 200. The mining stocks have got some work to do. Here we are. That must have been the weekly time frame. I probably misspoke there. Here we are in the daily time frame. Same story, resistance. Prices running into this overhead resistance. When we work through that level of resistance, there's the 50, there's the 200. Stock's got a tough road to hoe, albeit what often happens in the mining stocks is that once once the metals make a decisive move, we get gold back up here, testing this high at 1870 or so, the mining stocks will be shown. It'll be a whole different story in the mining stocks. So this is SIL, which is our proxy for the silver mining stocks. We're looking at the weekly time frame, currently pushing up into overhead resistant. Energy, still down low, but rising. MACD is in bear mode, and nothing exciting in this chart really. And again, the mining stocks are going to follow the metals. Excuse me. So here's our dollar in the weekly time frame, and the dollar was in a strong uptrend. Obviously, we're getting a pullback now. This is the 10-week moving average currently being tested for support. We can see that based on MACD reached a level of overboughtness that was even more extreme than we saw back here in May of 20. So mid-20, MACD reached this level of overboughtness, and then we got a big correction. In this recent rally, MACD has become even more overbought and is now pulling back. Now, I wouldn't say that this rally is over by any means. I would just suggest that we're in a pullback. And as I have pointed out numerous times, I think that unexpected strength in the US dollar is reflective of global economic events, not necessarily the strength of the US dollar, and we don't need to elaborate on that here. In the daily time frame for the US dollar, we can see that, it looks like we had this, prior to the last couple of sessions, we would have called that basing action, and expected potentially a continuation of the move higher. Obviously, that's not what we're seeing today. We've gotten this pullback to the 50-day moving average, and we'll have to see where we go from there. Energy in the tank, MACD still in bull mode, currently on a sell signal. Bond markets have been choppy, to say the least. A lot of volatility in the bond markets. And of course, if you're paying attention to the talking heads at the Fed, they've been busy. We're going to taper, we're not going to taper, we're going to taper, we're not going to taper. I don't listen to them all that much because that's all they say. They've only got two tools. They've got two tools in their toolkit. One of them is blarney. It's hot air pumping out of their mouths, the talking heads, blah, blah, blah. That's one tool. And then the second tool, it's the printing press. Those are the only two tools they have. I mean, they'd like you to believe that they have this whole, they whip out the red toolkit and they open it up and they got screwdrivers and they got pliers and, all of this and fancy wrenches and, who knows what they've got in there. But that ain't reality, folks. The reality is they got two tools. It's blarney, it's the printing press. And so anyway, this is just volatility in the bond market. I'll come off my soapbox. Sideways action, call it what you will, but notice that the general trend is upwards. Here we're seeing a big move this morning. Obviously, this is indicative. We are looking at, this is yield on the 10-year note. So when yield is rising, that means that people are selling bonds. And so this supports what I'm seeing. I haven't looked at the futures yet for equities, but evidently the equity markets are happy this morning. Going to have a big start for 2022 in the equity markets today, and this would be supportive of that idea. So money's going to move out of bonds as the avoidance of risk, and then move into stocks, the taking on of risk. And so that's probably what we're seeing here. Bitcoin. So Bitcoin, I don't follow crypto closely. It's not my thing. Obviously, I'm a precious metals person. There are people who believe strongly in the cryptocurrencies and altcoins at this point. I'm not one of them. I follow the markets. I follow all of the markets, and so crypto is just one of them. I use Bitcoin as my proxy for all of the cryptos, although I really question that methodology because last I saw, the current number of cryptocurrencies, altcoins, I don't even know, are there more? Maybe there are more than two categories of crypto at this point. I just don't know. 9,000 of them, 9,000 different crypto thingies. Well, so using a single vehicle as a proxy for 9,000 different crypto vehicles, probably not the best strategy, but again, I'm not all that interested in crypto. Bitcoin specifically has been soft. If we look at it from the perspective of alternative investment vehicles, so, we could put crypto and the precious metals all in that same basket of alternative investments, and none of them have been doing well lately. So maybe it's not surprising that we're not seeing anything exciting going on in Bitcoin right now. As an outsider looking in, casual observer watching the crypto markets loosely, one of the things I have noticed in recent months, it appears to me that Elon has moved on. So, Bitcoin was Elon's thing while it was profitable. And now it looks like Elon is touting doggy coin is what I call it. I think the correct pronunciation is Dogecoin. But anyway, so yeah, I think that Tesla as a company is still accepting or will still accept Bitcoin as payment. And I don't know, I don't think that Tesla as a company is continuing to hold Bitcoin in their reserves, corporate reserves, again, and Elon's out there touting doggy coin. So take that for what it's worth. Folks, that's a quick spin through the markets. It's almost 9 a.m. New York time. I'm going to go do my thing in the markets, and I will talk to you soon.